Olaf is one of the top token fund managers in the world, and I happen to be, my firm USV happens to be an early investor in Polychain. And so what that means is that a few times a year, I get to stop by his office and talk to him about what's going on in crypto, what's interesting to him, what he likes, what he doesn't like. And he might ask me a few questions too. So we're going to just kind of do that right in front of all of you. So just imagine that, we're sitting in Olaf's office and I'm catching up with him on, what's happened in the last 3 or 6 months since we last got together. I'm the investor who's kind of curious about how he's thinking about investing my capital, and he's the one on the front lines making those decisions. A couple of things that we're not going to get into. We're not going to get into prices. We're not going to get into returns. We're not going to get into specific positions that Olaf may or may not have. I might ask him those questions if it was just him and me in a room, but we're not going to do that on stage. And we're going to try to stay positive. So we're not going to really talk about shorts and things like that. You don't short anyway, do you?
No, we never short. We're long only. We hold forever.
Right, so no reason to talk about shorts. You don't do it.
Never short.
All right, so Olaf, what is the most exciting thing that you have seen happen in your world, in the way you think about or you invest in crypto so far this year?
Yeah, so I think a really big one is that we've seen the launch of some of the first really sophisticated large-scale proof-of-stake protocols. So proof of stake has obviously been something people have been talking about for a really, really long time, and there have always been these sort of prototype experiments on the fringes trying to figure out how to do this appropriately. And I think that a lot of people think about proof of stake simply as a sort of technical consensus mechanism, but there's this other aspect to it that I think is really powerful, and it's the way that it unifies the people who are actually validating blocks and sort of doing the mining and the actual token holders. So in systems like Bitcoin and Ethereum, these are two different groups of people. And there's a lot of interesting social effects that come with the token holders actually validating all the blocks. So one is that everyone is kind of talking constantly about how to get the best returns, what their setup is, who to delegate to, and all those sorts of things. And it makes everyone like a lot more engaged in the process of actually coming to consensus. Whereas I think, say, mining in Bitcoin is sort of this invisible thing that happens somewhere. And so there's not just potentially technical improvements or efficiency improvements or things that can be extended into like sharding, which is really only possible with a proof-of-stake architecture. It's also this sort of social dynamic that I think shifts among all the token holders. And I think that's really powerful. Another example of this is, for example, when you earn block rewards as you stake, you can instantly and liquidly sort of reinvest them in your staking operation. Whereas in, say, a Bitcoin mining operation, you need to like get that Bitcoin and then sell it for dollars and then go buy some hardware and ship the hardware to yourself and hook it all up. And there's kind of this lag time. And so I think that the proof of stake, like we've always thought about it as a superior technical consensus, but I think there's these other rippling effects that are happening as we see these protocols go live that is sort of hard to predict. And so the couple launches I'm specifically thinking of are Tezos and Cosmos.
And are you at your company staking those assets?
So we haven't been really public about this, but to my knowledge, we're running the largest staking operation in the world because we are...
You are public now.
Yeah, well, yeah. You heard it here, folks, yeah. So I think that as a large holder, the really interesting thing is now we have a responsibility not to sort of passively sit on the sidelines, but actually build a cloud staking infrastructure that can operate at scale and in a highly secure manner, and participate not just in block validation, but actually on-chain governance proposals, which are going to, over the long term, dramatically affect the value of the actual tokens we hold. And so I find that we end up being way more engaged as a holder of these assets.
So, as you well know, there are a lot of companies, we've looked at investing in a number of them, haven't invested in any of them yet, that are providing staking services like AWS for staking. It sounds like you have chosen to build your own infrastructure. Do you think that's a long-term decision, or do you think that you could imagine a world in which you'll ultimately move to, a third party for the infrastructure piece.
I view it as a long-term decision. So what we realized is that over time, if you look at proof of stake protocols as a percentage of like the general market capitalization of all crypto assets, it's pretty small today, right? It's probably under 5%. I think that number will rise to something like 50%. Like I think it will grow by about 10 times from where it is today. And when we look at our portfolio, in early 2018, we realized that probably most of our fund is going to be in proof of stake protocols. And so this becomes sort of existential, right? Because there's not just an element of understanding technology and participation, but also of actually voting on these governance proposals, as well as generating returns, obviously, for our investors. But all that being said, when you're sort of depending on a third-party service at the scale we have, you run into a huge number of problems. So for example, in the Tezos system, people have to post bond. And nobody could ever have covered our bond because we're just too large of a holder. In addition to that, there's security risks, right? So in, say, Cosmos, as a delegate to someone who's running a staking operation, if they are out of consensus and get slashed, you actually lose funds too as a delegate. And so you're taking on the security risk if you rely on a third-party provider, which for us, this is client funds. And so we felt more confident building the whole thing in-house.
Right, so it's a little bit like Google, Facebook, Amazon don't run on third-party cloud services. They're so big that it makes no sense for them to do it.
That's exactly right. And the other thing that matters a lot to me is that we're day one. Because, we want to help these projects from day zero to get to day one. And so we always aspire to be sort of launch participants, which again is hard if you're relying on a third-party service.
So I'm just an individual holder of Tezos, which is actually not true. Maybe I should be, but I'm not. As an individual holder of Tezos, I should find a third-party provider to do my staking for me. I shouldn't be trying to build that infrastructure myself.
I think it just depends on your interests. So I think we see a really large hobbyist community that I think is doing it sort of for fun. It's kind of like running a Bitcoin node. Most people don't do it. Most people probably shouldn't have to do it, but you can, and it gives you a better sense of what's happening in the network.
But there is a difference, right? Because with Bitcoin, I started buying Bitcoin in 2011, and I've never mined Bitcoin in my life. But I didn't need to because there wasn't any incremental value as a holder of Bitcoin. Yep. But if I'm a holder of a stake-based asset, and I'm not staking, then I'm leaving a lot of money on the table, right?
Yeah, you are. So you should definitely either delegate or do it yourself.
Right.
And we actually have seen really successful participation in these protocols. So I think that in general, the participation in Cosmos and Tezos has been around 70 to 80% of all coins staked, which is, in my mind, really impressive.
Is there some kind of, does staking cause an investor to want to own more of an asset? Are there economies of scale to staking?
So this is one of the really interesting things about staking is there really aren't. So there are at a really small scale. So for example, just like AWS costs, if you want to run a cloud instance that is your staking node, obviously if you have kind of double the money, that becomes a smaller proportion of your expense ratio. But the difference between being 1% of the network and say being 5% of the staking network, you're really not seeing economies of scale. And it's because in offline mining, hardware is different and power consumption is different depending on both your geographic location and the actual hardware you're using. Whereas in staking, your coin is just a fungible coin, right? If we have more stake, it's not like we have better coins to stake or something like that. So actually, this is another feature of proof of stake that I really like, is there aren't as much economies of scale for token holders.
Right. One more question on staking, we'll move on. I have heard some people, and I won't get into who they are, but you'll recognize the comment, argue that staking is not, proof of stake systems are not as secure as proof of work systems. Obviously, you don't agree with that, but do you understand that argument at all?
Yeah, so I think that the fact that people are spending, quote, real resources, and again, I have issue with that concept on proof of work, so like real power or energy consumption, is somehow more secure. But I think that argument is vague. The other thing about proof of stake that is a really big deal to me is if you want one of these internet money platforms to truly support the global financial ecosystem and also reach the scale where it is replacing things like gold and fiat currency, which is what I'm in this to do. I think that you have to be prepared for actors who will attack these networks not with a profit motive at all, but actually solely to disrupt the network. And so most of the time when we think about crypto economic models, we think about rational sort of profiteering actors and how they could attack the network. But it's a different model when it's like, I have $100 million and I just want to screw up this system. And one thing about proof of stake protocols is if a 51% attack, or often in proof of stake it's 34% attack happens, after the attack happens, the sort of non-attack, like the honest people, can simply fork the chain and delete the attacker's coins. Like they literally just remove them from the ledger and continue forward, okay? If a 51% attack happens in a proof of work system, you have to actually change the hashing algorithm of the protocol, which burns down not just the bad guys, but also the good guys. So when a 51% attack happens in a proof of work system, you have to destroy the hardware investment of everyone. Whereas when it happens in proof of stake, you can only just delete the bad guys. And so when you're trying to prepare for attacks from highly very financially people that have a lot of money to attack the protocol, a lot of resources, and aren't financially motivated, I actually think proof of stake is as a better security model after the attack happens.
So it's interesting that you said that you have a number of proof of stake based systems. So you mentioned two, which are public, Tezos and Cosmos, and I'm not going to get into the specific positions you have, but it feels to me like you have placed multiple bets on staking.
Well,
so what was the thinking there? You don't think that one will win, or do you think that it's too hard to predict which one will win, and so you want to have multiple bets?
So the proof of stake design space is a lot richer than the proof of work design space. So in proof of work, you basically design a hashing algorithm, and that's it. It determines the kind of hardware people should use and everything. Designing the hardware is a different question. That's quite complex and everything. But in proof of stake, you have much more complex economic rules that you need to design. And these will have rippling long-term effects on the security and economics of the protocol. And so I think that in proof of stake, there's lots of different interesting ways to accomplish security, and I think it's too early for us to tell what is the best model. And I think that's going to be many years of learning. The other thing, though, just pragmatically, when I look at all of the kind of breakthrough systems that we've been looking at through 2016, 2017, 2018, the reality is the vast majority of them are proof of stake. So I wouldn't say that's us so much as sort of the market. Really, the last sort of major proof of work launch I can think of is Grin.
Right. So beyond staking, what else are you excited about from a perspective of, I think this big thing is going to hit the market in the next year and it's going to change things in a significantly positive way? What would be like the next thing on the list?
I think the next thing would be WebAssembly. So
WASM.
Or WASM. So in Ethereum, you have this custom EVM or Ethereum virtual machine that sort of interprets Solidity code, which is the language developers use to write smart contracts. And I think that a lot of the security problems of smart contracts on Ethereum are on some level due to Solidity. I don't like to just blame it on sort of developers making mistakes. I actually think that it's better if you can give developers more languages to write smart contracts in. And so when you replace that EVM, that kind of custom virtual machine, with a WebAssembly or WASM VM, it means that it can actually interpret many, many different programming languages as long as there's a supported compiler for WASM. And WASM is a huge open source project that's maintained by Google, Microsoft, and everything. So the high level of this is that it means developers will be able to express complicated financial logic and smart contracts using whatever programming language they'd like. I think that's a really, really big deal because the developer experience like if we see the transition from Bitcoin to Ethereum, Mike Hearn tried to build Lighthouse, which was a decentralized crowdfunding platform on Bitcoin. It took him like 8 months. It was really hard to build. It was really hard to use. Meanwhile, Ethereum in the ERC20 standard, we all know that led to huge success with decentralized crowdfunding as a use case. I think when you open up an even better developer experience, which I think this WASM VM architecture will be, and lots of different projects are all moving towards a WASM VM.
Including
Ethereum, yeah. So I think there's broad consensus that this will be a good model.
Right.
Yeah.
And are there any protocols that are live today with WASM?
Not that I'm aware of.
And when do you think we'll see one?
I think probably the first to launch will be Polkadot, if I had to guess.
And we'll see that this year, you think?
Yeah, I think towards the end of this year, yeah.
Oh, that is exciting. What about governance? A panel, maybe one or two before we got here, was talking about governance. And you and I were talking about it before we walked out here. So you have a very specific view about what the right governance model is. Why don't you tell everybody what you think it is?
So I think there's like proof of stake, there's a very big design space, and we're sort of figuring out what works and what doesn't. So one thing that I like about the Tezos governance model is that token holders actually vote on code level changes. So they vote on sort of pull requests. And so it's a very formal system for how to upgrade. They don't vote on like, should we swap out the consensus layer to XYZ? Which, let's say you vote yes, like what happens? The upgrade doesn't actually happen. Now there's going to be all this bike shedding on the technical implementation. What does that thing mean if it's sort of ambiguous and all the rest? So I like this idea of voting on very formal code level specifications where people know exactly precisely the code that's going to be merged in if they vote yes or no on this. So I think that is one very exciting thing. The other thing is that...
So just on that, you mentioned that you're running a large staking operation for Tezos. Does that mean that you're also participating in these votes?
Yes. So
and how often are you doing that? Is that like happening every day?
Well, so the Tezos upgrade process takes about 3 months in total, and it's various stages of voting. So we participate in it, but it's designed for slow and steady upgrades.
I see.
It's not like an overnight, and it's not designed for irregular state changes or anything like that.
It's not continuously upgrading.
No, it's not fast. So the other thing about the other thing I think about with governance is in historical protocols we've seen to date, there's a lot of incentive for developers to build applications on top of protocols, and they can raise a lot of capital basically. So people that do token sales, people that launch tokens, they can raise money from venture people, they can raise money from crowdsourcing and everything. Whereas core protocol development really isn't formally funded. There's often like an informal sort of foundation level thing, but it's not super formal. One thing I'm really excited about is the ability for token holders to say, okay, would I be willing to take a 1% dilution in order to pay developers to merge in this new code, so merge in this new upgrade? So suppose it's Bitcoin, and we're merging in segregated witness or SegWit. How much does that increase the value of Bitcoin? Does it increase it by 1%? If I think so, then I should be willing to agree to a 1% dilution. Well, 1% dilution of $10 billion is a lot of money. It means that developer teams for these larger scale protocols can get paid, like have sort of code bounties to contribute to that low level protocol on the order of kind of millions, tens of millions of dollars. And so I think that this...
Who sets the price for the contribution? So let's say that I've come up with some much better way to do something.
Yep.
And I've got the code. I'm going to contribute it to your protocol, but I want to get paid. Who sets how much I'm going to get paid?
Yeah. So that is very much the token holders have to all agree on the outcome.
Right, but
that's going to be.
But who puts the deal on the table? Does the developer who's got the improvement?
It could, in theory, go either way. You could say, I have this improvement, or it could be bounty, we're looking for this improvement. If you qualify, you'll earn this money. So I think it could really go both ways. And the other thing is, listen, that process is going to be not always very clean, right? It's not always going to be this clean thing that's like, oh, this is amazing upgrade, 1%, no problem. Because the way to think about this is token holders, I do believe in their ability to be profiteering kind of rational actors. And if they think that the token value will rise more than the dilution they're taking on, rationally they should do that. And so in these major upgrades, say a 1% dilution, that doesn't feel like that big a deal. Like even as a big token holder, I'm like, yeah, any upgrade is probably worth at least a 1% rise in the value of this token. And so that just ends up at scale being a lot of money and these huge protocol level bounties for these teams. And it means that you reduce that, you take away this sort of foundation layer that's this sort of loose tether to the legal and geographic world that basically is just sitting there to have a bank account and rules for how those funds are allocated. But again, like what is a bank account and rules for how those funds are allocated? That's just a multi-sig address basically, or perhaps a very simple DAO. So I think that there's just a lot that these protocols can do where they bake in the ability to incentivize continued improvement to that protocol, which I think is something that things like Bitcoin and Ethereum that are already out there today would benefit from greatly.
What other kinds of protocols excite you? I mean, we spent a lot of time talking about sort of base layer chain protocols, whether proof of work, proof of stake. Many of these are smart contract systems. And I know you've invested heavily in those kinds of protocols. But are there other kinds of protocols that you're excited about, whether you've invested in them or not, and think are going to be an important part of your portfolio in the coming years?
Yeah. I mean, I think, projects, like I want to invest in more DAOs. So projects like MakerDAO, I think falls outside this category of sort of WASM or smart contracts or consensus, but provides this very robust decentralized stablecoin and lending system. So that is the ability to invest in like a DAO that manages either a protocol or a smart contract of some kind feels like a promising area to me.
Right, and Maker is just one example of that, a way to stabilize a coin.
Yeah.
They've come up with a very clever protocol to do that.
Yeah, exactly right. And so this idea that token holders could actually manage, again, in a rational, it's not charity, right? It's kind of a rational economic manner, manage the success or sort of parameters of an underlying smart contract, liquidity pool, manage funds to fund development, and actually be remunerated for that. I think that's a super interesting category. And I want to see more experiments around sort of decentralized governance.
Are there other examples of DAOs that you could imagine or that other people have come to you that maybe might flesh out for the people in the audience, like what other things one might do with a system like that?
So I think this may be controversial, but I almost want a resurrection of what was originally like the DAO from 2015 or 2016, where you actually...
But you'd write the smart contract in like C++.
Yeah. I would simplify it a lot. The way I would do it is if you contribute, let's use Ethereum as an example. If you contribute Ether, say 1 Ether, you get 1 DAO token. And then that DAO token just represents piece of a really big multi-sig on how those funds are spent.
Right.
And there's all sorts of like theoretical problems with this. Suppose I own 51% of the DAO tokens and then just vote to pay myself, right? I think that there are problems to be worked out, but a lot of those problems, I think we need to have live experiments because these are very social things. It's not like we can run a test net with people. Right? When it's just pure technology, like what's the throughput, right? We can run a test net and all these instances and test. But when it comes to like how will people behave when we give them all the rights to vote on a capital pool?
It's all the game theory stuff. The point is that the best way to solve game theory is to play the game.
Yes, exactly right. And there's this weird intersection of game theory and behavioral economics that is complicated. Like when it comes out that Tether is unbacked, as much as people thought it was, Tether kind of stayed at $1, right? And I think that it's hard to analyze like why that is, because it's already interesting that Tether is $1 to me because there's sort of zero probability or near zero that this goes up, right? But there's some probability that it goes down. So whatever that probability is, I'm surprised it's not sort of baked into the price.
Well, this is something, again, that you and I were talking about before we came out. The thing that I'm sort of surprised about, in the global financial markets, the legacy financial markets, the ones that won't exist in 20 years, the shorts basically are in some ways the same thing as like the hackers are. Like, it's their job to find the frauds and profit from them, right? And so, when George Soros thought that the Bank of England was propping up the pound, he just hammered them, and he broke the pound, right? Broke the Bank of England, right? And so, when is that going to happen in crypto land? When are people going to go out and 51% attack protocols, break security models, and break, DAO structures, and just kind of like when is there going to be enough money and enough sort of shorting infrastructure that, the capital markets can start to do what we want? I mean, I know a lot of people don't want them to do this, but I want them to do it.
This is just part of the maturation of the whole technology.
Right.
This is my thing. It's better to do that at small scale than big scale.
Right.
Right. You want to break Bitcoin when it's worth $1 billion, not $100 billion. So to me, so I think this is happening in small ways. One of the things, a lot of the very large projects that get to a high market capitalization, in part, they've been through the ringer already, and it's part of the reason that they're valuable. But there's lots of small projects that really critical attacks happen. There have been inflation attacks against certain privacy coins that in some cases are very hard to detect. Even in large projects like Monero, an inflation attack was found and patched before it was exploited, right? But these things are out there. I think another really interesting piece of this is that when you attack a protocol, like shorting the Bank of England, so to speak, you actually can stay anonymous most of the time. Or, it's hard to figure out who did it. And it's also hard to figure out who the victim is exactly, right? Because if you hack an exchange, like victims exchange, but like if you break a protocol and get some inflation and give it to yourself, it's like you kind of victimized every single person who held that coin in this small way. So I do think that it's happening in a small way. I think it'll grow in scale, and I think shorting shorting liquidity and the depth of borrow will actually be a big part of that.
So if somebody came to me, or we found somebody who was raising a token fund, and their whole strategy was this: I'm going to be shorting the frauds out there, and then I've got the 20 smartest, crypto hackers in the world, and we're going to just break this stuff and get paid handsomely for it. Should I invest in that?
That's your decision. I think academically, I find it super conceptually interesting, right? Like listen, like a lot of those vulture funds, every time they go short and publish the thing how it's a fraud, they get a lawsuit, right? You'd probably be in similar hot water with that type of approach.
Well, I would do it anonymously, of course.
Oh, well, it's a DAO, right? I mean, yeah. That actually, that's the type of thing that could be a DAO. Right. That's kind of interesting. Like we're gonna raise the fund, and I'm gonna sign my PGP key. Like I'm this really legit GitHub account. Fund me, and I'm going to go break protocols. It's kind of interesting.
Yeah, well, so if anybody out there in the audience or on the live stream or whatever is a really great crypto hacker, there's a good idea. Create the breaking protocols DAO.
Yeah, it's the pirate fund.
That's right.
Yeah.
That's right. So you having fun?
Yes. So we have,
That's what I always ask every entrepreneur, every manager I meet with at the end of the meeting. Are you having fun?
Yeah, it's an important question. We've grown the team substantially over the course of kind of 2018 and into 2019. And so it's really been a great experience for me to go from feeling like, okay, I just kind of sit by myself and work a lot, to feeling like, oh, okay, there's a real team of people that are all passionate about this the way I am. And so that's been a huge pleasure. And it's a little similar to what I experienced with scaling the early team at Coinbase, right? When you get a bunch of really smart, resourceful, like-minded people together in a room, really remarkable things can happen. And that's the type of companies we want to back, but it's been a pleasure to watch that happen over the last year and a half.
Yeah, well, you've done a great job, and we're thrilled to be early and long-term partners of yours, and I'm really excited for all of these new protocols to launch and see how they perform.
Yeah, so am I, and thanks for all the great questions, Fred.
Okay, great.
Yeah.
Thanks, everybody.